Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. My name is Mark Gardner. It's the 13th of November, 2025. The defensive switch continued overnight as investors rotated out of tech. As you can see, NASDAQ was down very slightly, S&P up very slightly, about 0.07, NASDAQ down 0.06, the Dow was up 0.7%. The Russell did drift off, down 0.27. I think there's some rising bond yields. Our market had a pretty disappointing end to the day yesterday. We were actually doing quite well for most of the day, and then someone woke up for the first time in 18 months. Someone woke up to the fact that the banks are expensive, because there wasn't really any announcements. Everyone's a little bit disappointed with Matt Commons, CEO of CBA's commentary. But if you actually go back and look at his commentary, it's pretty much exactly in line with what he's been saying for the last year. It's just that everyone's now listened for some reason. They do sit at record value. Well, they did sit at record valuations. Maybe, just maybe, 2026 might be the year where we actually consider buying some of those banks. It's still probably about another 20% to go. So it would be interesting to see if they can actually dip that far, but selling pressure there. What actually saved us was the resources. Rio and BHP did pretty well yesterday. We've had commodities start to drift higher again. In Asia overall, Euro stocks hit a new record high last night. Google actually announced they're going to invest, I believe, 5.5 billion euro into Germany. So that would have probably helped the Euro stocks. But they're still sitting at obviously at record highs, but have not had the rally that that the US has. But overall, and we sort of the technical's still pretty ordinary for the Aussie, and then they're so. We've still got a long-term buy trend, a strong buy trend in most of these indices, but as you can see, the hourlies and the dailies are flicking back and forth from, sell to strong buy on a pretty regular basis here at the moment. It'll be interesting to see how this generally sort of plays out over the next couple of weeks. We do have around about 11 a.m. today, which is probably the earliest time. They've managed to, the whole Congress has asked back to vote on the government shutdown. I cannot believe that one of the congressmen complained that he couldn't get a flight, so he had to ride a motorbike back there. But when they're responsible for, 10% of the airspace being shut, but c'est la vie. They're still getting paid, I suppose, despite the fact that they probably should be the first ones to not get paid. But so that should pass through. The Democrats, apparently there's a lot of internal fighting going on because the 7 of them and the independent that crossed the aisle to get this deal done, is really must be concerned about their seats in the midterms to divide the party. And I dare say, the way party politics is these days, they won't get put up for election next time for their seat, I wouldn't imagine. As you can see here, Nvidia was up slightly, but it had a pretty bad day yesterday. Apple drifted off 0.7. Meta and Oracle off, Meta is off 3, Oracle's off 4, Amazon's down 2, Google down 1.5, was up early. AMD had a pretty good result. Investor Day, which pushed that stock up a little bit. They presented super ambitious growth targets for their, for the next 3 years. That's not in the bank, but that move may be short-lived. Cisco reported earnings. They raised their annual revenue forecast after the bell. Again, banking on multi-billion-dollar data center expansions, networking equipment. They raised their forecast from 59 billion to 61 billion. So not massive. We're talking maybe 4% or something like that. But they're up. They were not only up 3% during the day session, they were up a further 5.5% in the aftermarket as well. Circle, which reported as well, beat top and bottom lines, got smoked for 13%. So a little bit more of that. And that's more of it's only had 2 reports so far. It's recently listed, but that's really frothy end of the market. It just seems to be whatever they do, they're people are selling into it. So, but as we can see again, financials and healthcare, and and the defensive sectors really being the only positive green lights on the heat map there. So I would imagine that that would probably continue. And we were buying healthcare about a month ago. It's been a bit of a jumpy ride, but I dare say that a lot of those that help pretty much that whole healthcare sector is trading on really good or really cheap historical PEs overall. And I do think that a bit of a shakeout in the tech sector will actually probably be the thing that triggers the rally in that sector, which sounds a bit odd, but it usually is when you start to see those defensive names attract a bid. Woolworths, I think, in Australia would be another really good example of that. It's currently around the 28.5 mark, but I think the last time, during April, I think it went from 28 and a half up to about 32, 33 bucks, while the rest of the market was getting hosed. So it's a very good, you probably need to be on it prior to the move, but it's not a bad way to still be invested, but be that a little bit more defensive overall. So. One that I didn't address was Oclo. Actually, slightly missed the other day. It's one of our favourite holdings here, but didn't really head down too much, down a few percent for a stock that has had about a 200% range in the last quarter alone. So, not a bad result. There's no heavy selling there. So that probably means that power thematic and that powering and the rapid expansion of data centres and power management part is going to be, is going to still be attracting a fair bit of capital. There was reports, and I haven't fact-checked this or verified, but there's Nvidia's got certain sections of their data centers happening at the moment that are basically they're shut down because they can't get power. So this power demand thing's going to be quite a big thing overall. And I dare say that that nuclear will obviously be that favoured option. I did overhear on Bloomberg this morning, Chevron made a few announcements. They're going to try and increase their free cash flow by 10% a year for the next 5 years. And they're talking about building a data center, which, again, I'll have to go and have a deeper look into that. But they've got the energy, they've got a lot of natural gas, which I think in that Texas region, they tend to burn off because it's sort of it's a byproduct. It'd be interesting to see if they're genuinely going into the data center business, or whether and then obviously supplying the power via natural gas, or whether it's just they're trying to piggyback a little bit of this AI thematic. So I'll get back to you on that one. Overall, big move overnight. Silver is back, baby. We saw just out of nowhere about a 6% move in the futures last night, back to within about 20 odd, or maybe 50 odd cents from the previous high. When those sort of moves come out of nowhere with no catalyst, if we break from a technical standpoint, if we break the upside here in silver, I think it's just gonna rocket from here. I think that gold to silver ratio 50-year average is probably around the $63 to $65 mark, which is plenty to the upside still to go. If it's anything like the previous 2 bull market rallies in silver, we're talking 400% move in 08 to 2011 would put it somewhere in the at 150, which I doubt. I'm definitely not calling that. I'm a bit more sensible, but the 1979-1980s rally would be the same as this thing rallying from the start of this year, which was around about $41 to over $200. So just to give you some historical context, but so I guess the lesson there is run a trailing stop potentially, and maybe just trim along the way, but. if it does have a history of going on like ridiculous runs. So possibly try to let at least a small amount of the position run. Would be try to jump on some of the. I think some of these silver miners or silver explorers, junior miners on the ASX are pretty cheap at the moment. If you want to know who they are, make sure you sign up to Mosaic, and you will get because you get a 1 month free trial at the moment. We're releasing a recommendation this morning for a silver miner on the ASX. So yeah, you'd be getting that if you sign up to Mosaic. Just go to www.mpcmarkets.com.au/Mosaic, and you can sign up, get a free 1 month trial of all of our recommendations. And other moves, copper is grinding higher. Actually, price action's been super positive in copper. It didn't drift off anywhere near as much as what those precious metals did. Gold was up 1.5%, silver up 4.3%. The futures were up about 6%. Copper up 0.5%, platinum up 2%, crude dropped away about 4%. Lithium again. Making a bit of a comeback. That mineral resources deal yesterday with POSCO. They took a 30% stake. Mineral resources rallied about 9 or 10%, which alleviates a lot of their balance sheet issues. It doesn't alleviate their dodgy CEO issues, but their dodgy highway for trucks that keep crashing, but. Some otherwise positive news for mineral resources. The day ahead in Australia, actually, there's a fair bit on today. There's results expected from GrainCorp, Orica, Xero, Catapult Sports and Infratil. And then there's a bunch of AGMs as well. Arena REITs, AUB Group, Computershare, Catalyst Metals, Greatland Resources, GYG, Ingenia, Communities, Inghams, NextDC, PEXA, Servcorp, Superloop, Strike Energy, and Seven Group Holdings. And we've got Aussie labour force today. Unemployment rate expected at 4.4. I think it's the economists you've done their monthly job of just phoning it in. I think they expect up 20,000 every month. That's the consensus. I just don't even know why they bother doing the survey. It seems to always be 20,000. We will start to get some details today out of the US when and if this government shutdown finishes in the US. I would imagine we will start to get drip feeds of some economic data and when it's going to be released. So it's going to be an interesting one. There's just going to be random releases of data, I would imagine. We're going to have to keep a really close eye on the BLS website. I would be very careful following, external calendars on this stuff because a lot of them are written in routines, which the BLS normally sticks to, like first Friday of the month is payrolls, and all that sort of thing. So I'd be a little bit wary there, but I think that pretty much wraps it up. I would imagine, after a pretty poor performance yesterday, that gold and silver rally, that broad defensive move should see the ASX probably bid. I think the SPI was up about 0.1% at around about 8.15 when I took down the numbers. So, but it seems to be a case of if you're day trading, you're buying in the morning, you're selling at lunchtime, and probably going short into the afternoon lately. The price action's been repeating that pattern pretty consistently. So I'm not entirely sure why that Asian session around midday onwards hates on the ASX, but it is what it is. But yeah, have a great day, everyone, and we'll speak again tomorrow morning.